Welcome to another episode of Time, Talent, Treasure Radio from Stewards Planning Group. Stewards Planning Group is a company that specializes in helping you build purposeful retirement plans, custom plans that not only help clients steward their treasure, but also their time and talent as well. They believe if you're taken care of financially, you can go even further to make the family, community, and kingdom impact you truly desire to make, which is the ultimate purpose of wealth. If you'd like to set up a no-cost, no-obligation meeting with one of their financial advisors, please give them a call at 222-4236. You can request a meeting at stewardsplanning.com, or you can simply stop by their office on 19th Avenue Southwest in Wilmer.
Hey everybody, and welcome to another episode of Time, Talent, Treasure Radio. I'm your host, Ben Taatjes. Once again, joined in the studio today by one of our talented advisors, Tim Mattern, is in the office with me. How are you, Tim?
Good, Ben. How are you doing today?
Hey, I'm doing good. Beautiful weather we've been having, so that's been nice. And then somebody told me that it's National Ice Cream Day, I guess, is going on right now, which is a big deal around our office. I guess they're going to be celebrating later today with some ice cream.
It's a good day for it. It's a little cozy outside, so it works out perfect.
It'll be good. So the other thing we're celebrating is, the passing of this new bill. And I know that it's getting a lot of press, the One Big Beautiful Bill. I want to get into that a little bit today. Today's show, it's Time, Talent, Treasure Radio. The last couple shows, we spent a lot of time with Matt Hookster talking about the mindset behind money. And today we want to get into a little bit more of the nuts and bolts, like the actual, what is the market doing, kind of what we're seeing the first half of the year. It's a good time to do that. We've got 2 quarters in the books for 2025, so it's a good time to kind of review that together. And when I get into that, Tim, I just highlight for us kind of it's been a wild first half of the year, right? I mean, we've had a war going on. We've had a trade war kind of going on, and yet we still find ourselves here, at the halfway point with a pretty decent year-to-date and a positive Q2.
Yeah, it is interesting. Volatility has kicked up, and we saw that back in April, Ben. And I think what we just were talking about is the market does not like uncertainty. And so when you have tariff talk and other global impacts, trade wars and actual physical wars too, the market doesn't react necessarily in a positive way. It goes up, it goes down, depending on kind of the headline for the day. And to be honest, if it's bad news or good news, the market just wants an answer. And that's what we haven't seen. It's just been a lot of conversation, a lot of negotiations, and that's why we see so much volatility, I think, towards the latter half of the first quarter and then to start off the second quarter back in April.
Yeah, it's been really interesting to watch. I guess if I had a crystal ball, which we don't, and I would have envisioned that showing me if I looked at what we've been through here in our economy and kind of the tariffs and the war you're talking about, I would have guessed the market would be down this year considerably, right? I mean, that's the reason we don't get into market timing. Again, I don't know where the market's going to be at, but I mean, year to date, maybe just the S&P 500, where are we at year to date?
Yeah, so what's ironic about that is we're sitting, according to FactSet, right? So we're sitting at 6.2% year to date. What's ironic about that is in Q2, we received 10.94 of that. So that tells you that actually the first quarter we started to go down and lag, and we're not having a good March and April. And the second half, May and June, really ticked up, and we had a great finish to the quarter. So now we're sitting positive for the year, which most clients that we're meeting with are actually surprised that, hey, I'm up, let alone 6%, which is great.
Yeah, and of course, if anybody wants the information that we're going to share today, get a hold of our office. Cetera Investment Management does a very nice quarterly recap on the markets, and that's where we're pulling this information from. They're pulling it from FactSet. Again, and all the equity performance is total return based, which includes reinvested dividends. So that was the S&P 500. So again, seeing that positive is interesting. And I guess certainly I've got a pretty good memory, and I think what happens is we tend to have very short memories when it comes to market returns, right? So we go back to many times in history where the markets are volatile. I can remember really well Trump's first presidency. We had a lot of volatility, which is every presidency, but it seemed like more because it was, it was an announcement here, and then there was a little bit of back and forth with the Fed, and then it was this and that. So I think just as a important bit of information for today is make sure you stick to a plan, right? So we're talking planning with all of our clients, and what's so important about planning is that when the markets are good, it gives you some perspective, right? When the markets are not as good or they're going down, it gives you a plan. And I think that's really, and something to stick to. And I think that's really, really important. So I think the market this year, again, when we saw certainly the passing of the bill, the one big beautiful bill, I think it did give some of that certainty you were talking about, Tim, and allowed people to kind of, hey, we're moving not necessarily past the tariffs, but we're starting to see that. But we're certainly, all of that impact is not built yet into what we don't know how that's going to impact every single business. It trickles out to a lot of different places. So it'll be interesting to watch that as we go forward. But the next couple of shows, actually, we're going to spend some time kind of going through this bill, right? So the major provisions, some of the effective dates, kind of some of the changes. And we're going to throw out some numbers. We'll be talking through that. And I think just, again, what's most important that people hear from this is economic, times change quite often. But what you need to be looking at is your own personal economy, what's most important to you. And some of these things will impact very much our clients. Some of the changes are very positive, I think. But again, we'll go through a few of those. And today, I think just high level, Tim, maybe cover like big picture. I mean, what did it do as far as extending tax cuts in general? And then we'll kind of move into some of the more particulars in the weeks to follow. Yeah.
And to highlight that too, back on the planning piece, if I can, it is important because I think, we get so focused on, math doesn't change at the end of the day. Policy change, math doesn't. And if you're sticking with a plan and working with your advisor, working with us, that's what we really want to focus on. I think that we need to ingrain that, math doesn't change. Stick to the plan, work on it. You're going to see the ups and downs. But
yeah, math doesn't change, but tax rates do, right? Tax rates do. And that's exactly what I like about this bill is, hey, we've got some things that are now permanent, at least permanent for now. It's just kind of a funny thing to say, but cover that, like what actually was passed in general, and then we'll move into more particulars next week.
Yeah, so I think the biggest thing for the tax rates is they extended the 2017 Jobs Act, and so those tax cuts are now permanent. And I know there was a lot of uncertainty. Those were set to expire at the end of this year. So we were being proactive, Roth conversions, looking at tax rates. Hey, we're going to see them bump up. We're not going to see those increase like we had thought. We're actually going to have a little bit of tax probably breaks for some and most folks in the middle class. So that's positive, which now gives us more opportunity to really work out your plan and say, hey, we have this extended time with lower rates. How do we go in there and make the best of it?
Yeah, and that's exactly the next show where we talk about some of the specifics. But I would tell you, if you're listening today and you're like, I don't understand taxes that well, and I don't, want to know more about my personal financial plan. First of all, we talk to CPAs all the time, but make sure you talk to a tax expert, a CPA, or tax preparer that understands the tax code. Meet with somebody like ourselves that can give you how the changes when we're talking about actually applies to you and your situation. That's stewardship. Right? I think a lot of us would believe that we're doing a better job of stewarding our assets than what the government will. So again, until next week, steward well.
Do you need help stewarding your time, your talent, or your treasure? If so, Stewards Planning Group can help. Now is the time to set up a no-cost, no-obligation meeting. You can do this one of three ways. Number one, give them a call right now at 222-4236. You can request a meeting online at stewardsplanning.com, or you can just stop by their office located on 19th Avenue Southwest in Wilmer. Thank you so much for listening to this episode of Time, Talent, Treasure Radio. We'll see you next time.
Securities offered through Avantax Investment Services. Member FINRA SIPC. Investment advisory services offered through Avantax Advisory Services. Insurance services offered through an Avantax affiliated insurance agency.